Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have. First of all, we start with the Bitcoin CME chart. As you might have seen on other exchanges, we did not have a weekly close above the range high. However, looking at the CME chart, we did get a weekly close above it, and for now, that has a bit more weight for me than the other exchanges and charts. If we look at momentum, we can also see that it is slowly shifting up, while volume has slightly increased. Momentum remains bullish as long as Bitcoin closes this week above 87K. That means we can still get a retest or even make a new low and form bullish weekly divergence. Everything is possible, but we go step by step. And while the scenario of coming back to the lows can play out, I first look for the possibility of forming a higher low. Now, based on the range, there is a simple tool we can use, the 50% of the range. Whenever we see a breakout attempt, we don't want price to move below the mid-range, which becomes more or less the invalidation for this upside idea on this leg. Losing that would likely mean a longer range or another test of the range lows. Until then, the general bias remains up, because as long as there is no clear weakness, I have to look higher. However, if we see price trading or closing below 89K, that would technically be an invalidation for this idea. And then we would need new data. In that case, we would look again at the range lows, a potential new low, or even a trap scenario where price quickly reclaims the mid-range. But for that, we would need to see how structure looks when it happens. For now, this is just preparation in case it does. Since that hasn't happened, I continue to look for higher lows and treat this as a breakout on the CME chart, because we had a weekly close above the range high. For the higher low scenario, we switch back to the cycle chart. What we were looking for here was the time window, marked out as yellow or green, depending on how many colors you can see. Just joking. Yeah, that laugh sounded weird. Anyway, let's move on. The time area was marked by this box or vertical line, where we said price is coming into a daily cycle low time window, with a 66-day cycle being roughly the completion of that range. We are now around day 59. That doesn't mean price can't form the low earlier. For example, we can see that the indicator already pointed out a potential new daily cycle low. For now, that signal is not invalidated unless price goes below it. It was an early call, and based on the day count, the last time window started near the highs. As I mentioned before, price could rise and form the daily cycle low through time, or it could drop to form that low. And as I also mentioned, only in rare cases do we get this sloppy grind up. More often, we see a retracement, and that retracement is now happening, with NASDAQ as well. Here on NASDAQ, we see price entering a weekly cycle low time window. That usually means we see a move down where a low gets formed. We can see this in the previous examples, with the W below the low. That blue area marks where a low is typically expected. It can deviate, but very often this is the correct time window. Now I add Bitcoin to the chart, and we look at what usually happened with Bitcoin when NASDAQ formed a weekly cycle low. So here we can see the NASDAQ weekly cycle lows. I marked out the ones in the bear market and in the bull market. We can see that Bitcoin very often forms a low or a higher low during these periods, where they more or less find the bottom together. In a bull run, this can be the start of a move after a range breaks out, or a bigger push when price remains in a range. In a bear market, we clearly see that when these lows got printed, price did not move higher, but was just a short-term move up before continuing lower. That's marked out with the red boxes. All other times, we either had a higher low formed, marked by the turquoise boxes, which we can see are often near the lows in Bitcoin, or the purple boxes, where price formed a local low but made a new low before moving higher. So in general, the correlation between them during these periods is not so much about precise moves in between, but much more about forming lows together. More often than not, and clearly because bull runs take longer, we see situations where they form a low together. That's what I usually look for when they drop together, either for divergence between them during that time window or for both hitting a higher time frame level. With that said, NASDAQ is now in the time window to form such a low, while Bitcoin was already rising from the last one that formed. Of course, this low can still be formed lower, or even within this weekly candle, as long as support holds. Switching back to Bitcoin, we were prepared for a retrace. The level I was looking for was the breaker low and the top of the 3-month order block as the first support area. For now, this level is not lost. What we've seen so far is a weekly open and a straight move down, which for now I treat as a bullish retest because the level has not been lost. So for now, nothing has changed. We are in the time window to form a low, and that usually happens when price retraces. That's why we had our local levels marked out. Let's switch to them. As mentioned, on the weekly time frame, as we saw on the CME chart where we had a close above the range highs, on this chart, we don't have exactly the same thing. Price still closed slightly above the monthly breaker, which is already not bad. That usually simply means acceptance back into the breaker range. We can also see that price opened and immediately moved down. This is not bearish as long as price is not closing below this level. Price can move down and form the low of the wick. That's something we often see. For example, if the wick opens near resistance or support, it can make a wick down into another level where on lower time frames, it looks like the level is lost. But on the weekly, it's just a wick formation, especially if that low is not taken out after Tuesday. That means as we move later into the week, if the low or high is holding, we often see continuation in the other direction. So if this becomes the low of the week, we would like to see it holding on Tuesday and Wednesday. An SFP on Tuesday is fine, but starting to close below it would not be ideal for a move higher. Looking at the higher time frame levels, we can see that below we have the 2-day order block, which aligns with the 50% of the range, acting as confluence. Until this low is lost, as mentioned at the beginning of the video, it remains support, where the first move of the week could form a potential low before another move higher. Of course, for the bearish side, if someone wants a scenario, it's simple. Form a high in the first days of the week, then you want to see the Monday low get lost, and best case, also the point of control and the order block. In that case, you would have higher chances to take out some lows. If price closes above this level on the weekly, then the chances are higher to look for more upside, even if price retraces. Similar to the previous time in this same area, where we saw a shallow weekly close inside, found acceptance inside, then saw a move down but still closing inside the level, that was bullish. For now, we have a close inside the level and the CME close above the range. Before going into the local levels, I also wanted to mention the monthly statistics that we had. First of all, we had this average time window for the monthly time frame. Here, price formed the low within the first days and then moved up, and for now, formed a local high, which again aligned with the monthly average time window for uptrends, as you can see. If we talk technically, the time window for a new low is still open. It is today. That means for a bearish month, we would need price to move below the monthly low. Based on the statistics, this is currently a low probability event. It can happen, but not very often. At the same time, the average time for the high is already set, which could lead to a range into next month. Now, we've already seen situations where price goes outside the average time window for either the low or the high, and that is usually not a bad sign for continuation. That means if we see price making new highs this month, it would be a positive sign. First, because we would make another higher high, and second, because it would happen outside the average time window. However, for more upside, we still need to hold and break key levels. Until then, we are also in the daily cycle low time window, which is very close to the lunar cycle timing. And the other thing we have is the FOMC statistics. Here we often see a reversal or reaction before the event itself and on the event. So one could argue now that the current highs are the pre-reaction to the FOMC date. Yes, that is possible. It also aligns nicely with the average high for the month and the cycle window, where we often see a retrace. In rare cases, it forms a higher low while grinding up and chopping. For me, I'm still looking for a higher low as mentioned before, whether that happens through a move up into the FOMC and then a retrace, or through the rare case of simply chopping higher, or even a retrace into the event itself. All of those scenarios are fine because they align with the lunar and daily cycle low time windows. So basically, in all cases, I'm looking for a higher low first, and only if bigger levels get lost would I look for lower prices. That doesn't mean you can't short or go long. If you have a plan for shorts and longs and it makes you money, that's perfectly fine. If not, then it's time to change something. With that said, nothing has really changed compared to the previous idea. The focus remains on finding a higher low first. If someone is short, these are good TP levels on the way down, and if price goes lower, that depends on the plan. For me personally, I wouldn't hold a short into a cycle low time window, but that always depends on the situation. Anyway, we'll come back to this chart if something changes or around the event itself. Now let's switch to the local levels. Here we had a 12-hour order block on the last update, and price was hitting the local range low structure stop. That's where I said, this is now the low, or really close to it. In a bullish case, you want to see a push higher or some chop around this area, making a few SFPs and then moving higher. Once price starts to lose these levels, we don't really have many structure stops in between. In many cases, that means price just smashes up or down, depending on where the next stops are. It's also leaving imbalance behind when it moves down, which often becomes a target. But before that, we would like to see some strength and finished business. I mentioned that the next target would be around 91.6K, and the drop almost reached that level. Because we are early in the week, I allow for some wicks and potentially taking these lows. It doesn't have to happen, of course. If price simply moves up from here and breaks above the 12-hour SR level, then I'm no longer clearly targeting those lower levels and would first need to look higher again. Same process as on the higher timeframes. That means on the lower timeframes, as long as price trades below the weekly open and below the 12-hour SR level, the lows are not safe, and an SFP is possible. Looking at the lower timeframes, price is currently bouncing and trying to get back inside the monthly breaker low in the box we marked out. Inside this level, we also have the weekly open, which by the way, has a wickless high. The weekly open is often a magnet at the start of the week, especially when it has a poor high or low. So if I were in a scalp or day trade, that would be a TP1 area. If that level gets lost, then I would look for the average loss for today, which sits exactly around 91.6K. And that would also be an SFP of the previous low and some older lows. If price continues up from here and reclaims the weekly open, then the next level I would aim for is the backtest of the 12-hour SR level. From there, we'll see how the day closes, because that would form the Monday range on a higher timeframe SR level. If you remember last week, we had the Monday range below, and now we have it exactly here. That makes it a very interesting level, because it's not only a bigger SR level, but also the Monday open range, which will show a strength or weakness. As always, if price trades below the Monday range, we look at where that happens. If it's near support, we can look for SFPs or deviations. If price starts to lose the Monday low deeper into the week, then more downside is possible toward the next level. If price breaks above the Monday range, then this becomes our base for the week, and we look higher, unless that range breaks again. If we don't see a break on either side, then we don't expect much and simply get a range week where we can chill, wait, or trade the Monday range if setups are given. That's it for the local levels. The 4-hour structure remains intact. We are looking for a higher low, or worst case, an SFP of the low. Only if price starts to close below that low do we get a bearish break. Of course, I wouldn't short directly into support. From there, I would just look for more signs of weakness or not. If you remember, this is the same area I showed at the start of the video, with the range midpoint and the 2-day order block. Losing that level could lead to more sideways action or even a retest of lower levels. So everything comes together here: time, levels, and structure. The question is, of course, do we reach those lower levels? For today, the average loss is right below the current low, so based on that, I can't expect it unless more volatility kicks in. Until then, this is the first place to look for a local SFP if not already long. Then we look at how price closes today. From there, we get our averages for tomorrow. If they are still around this area or higher, then price is holding this area as support. If we see price closing lower and the averages for the next days coming lower and lower, then of course we can start looking at those levels for the next trade. I go with the averages because they usually hold, even though in rare cases price can go beyond the daily average volatility. For shorts, if you're not already in one, the next upside levels are the same. The weekly open is the next level, because I don't know many people who want to short directly into a poor weekly high. It's unfinished business. Price can move down from there, of course, but the invalidation for a short can't really be the weekly open itself, because it can easily get wicked. That's usually a reaction area people want to observe. The open range for today is quite big, so purely level-wise, the whole price action today is still inside the open range. That means a bigger move can happen, but confirmation-wise, as long as price is not clearly above or below this area, it's neutral, and you have to decide whether you lean more towards shorting this area with a wider invalidation or longing it with the same idea, for example, an SFP of the lows, again with a wider invalidation. For myself, I'm still in my other trades, but I'm now setting this trade into profit. I already had a nice run on that trade, but I would not like price to come below 89K or 88K. Because of that, I'm protecting it and moving the stop loss into profit up to the monthly open. In that case, if price comes down there, I will have a successful trade and can make a new decision based on the formations at those levels. And of course, if we see another high and these lows do not get taken out, I will remain in the trade and keep targeting 112K. We have a lot of poor lows left behind, but so far price is making higher highs and higher lows, so I'm not betting against it. And as said, it all depends on your plan and what you trade for yourself. I don't take every trade or every scenario, and I'm fine with that's the summary for today. Price is reacting at major higher time frame support. The monthly breaker and the top mid of the 3-month order block remain the key levels. As long as price does not start closing below these levels, the higher time frame structure stays constructive. The CME weekly close above the range high adds weight to the bullish case, even though other exchanges are still slightly inside. We are inside the daily cycle low time window, around day 59 of a Tasher 66-day cycle. A retracement is normal here, but not mandatory. The primary expectation is still a higher low, either through a pullback or through time, chop grind. Only a clean loss of major support would shift focus to lower levels. At the same time, we are approaching the FOMC window, Jan 27-28. Historically, the market often reacts before and or around the event. A move up into FOMC followed by a pullback, or a pullback into the event itself, would both fit a higher low scenario as long as key support holds. On the local structure, the 12-hour order block and nearby structure stops were tested. There is a structure stop gap, meaning if price loses current support decisively, the next meaningful level is much lower, around 91.6K. As long as price is below the weekly open and the 12H SR, lows are not fully safe and SFPs are possible. Reclaiming the weekly open shifts focus back to the 12H SR backtest and the Monday range, which will define strength or weakness for the week. Trade management. Existing longs are protected. Stops are moved into profit around the monthly open. As long as price keeps making higher highs and higher lows, the plan is to stay with the trade. The 112K target remains active unless structure breaks. By the way, if you want these updates and simply want to support me, you can join the Patreon. There you get access to my Rabbit Box indicator, and I also share more information there than publicly or in Discord. Via Patreon and Telegram, I share things that I most likely will not share publicly. For example, some strategy insights. As a welcome bonus, you also get a trading journal and a monthly statistics sheet where you can track your own monthly performance. And there are a few more things coming in the future. So if you like the content and want to go deeper, make sure to join. With that said, I wish you a nice day, and I'll see you in the next one.